Oh God. Oh Lord, help. Okay.
Hey, you guys, it's Jeff with Great Expectations Realty. I'm here with Debbie Cowan from
Hey
Prime
everybody.
Lending. Uh, we're here for the Homebuyers Workshop. If y'all watched me last time, it was, what's a good word to put it, Tristan? It was painful to watch because this is not my thing at all. I wing it as best I can, but here we are again. I don't know how I convinced myself to do this a
Or
second
me.
time. Or Debbie. Well, really, that was the easy. I just said, okay, you want to do this? She said,
Well,
sure.
because I was going to do it just for you.
So we'll see. Look, I love you too, Debbie. But we're here. You guys, absolutely. If you've been here before, you know we have the chat bar. Feel free to send us questions, comments, whatever. If we can answer a question for you on the lending side or the finding a home side or even a property management side, I'm going to throw my wife under the bus because she's sitting over here on the side hanging out watching.
Yeah, we're going to drive her in here.
Right. We'll drag her in a minute. But feel free to holler. I'm going to hit the high points here and of what we've got going on in Marion County. Would you believe we've got 1,800 active listings right now, single family homes
That's amazing.
in Marion County, just Marion County.
I mean, that's amazing compared to where we've been.
Compared to the last couple of years, it's
Mm-hmm.
great.
Mm-hmm.
It's so nice to have inventory out there when somebody calls you and go, hey, I'm looking for a house.
And you can find something.
All right, what do you want? Instead of, well, here's what we have,
Yep.
you know.
Yep. It's a great buyer's market.
It is. So, yes, our house prices are still up right now. But that's across the board from what I've been seeing, at least in Florida. I don't keep tabs on anybody else,
Yeah.
really.
Yeah. We're retaining values, and that's a good thing.
People are still coming in droves, too. And it's, if you're looking to relocate, Ocala's a place to be.
Yep.
I
and
say
why
that
is that?
because I came.
I was just going to say, I think it's because you're here, right?
I mean, it is the horse capital.
Yeah,
and I love it for that. That's one of my favorite things about it, for sure.
Well, I love it because we're so centrally located. So we're outside of that storm issue that people tend to get. But if we want to get to the coast, which I just came from, it took me an hour and 30 minutes to get there. And
she came back just for this.
I did.
I mean, for real.
I did. So, so it's so nice. I mean, you're literally in a triangle here.
Yep.
So you can be in Tampa, you can be in Orlando, you can be in Jacksonville within, a 2-hour max period.
Yeah. I mean, you could be at a beach in an hour and a half.
Oh yeah.
Just about pick one.
Yep.
Not pick
well,
any
actually,
of them.
we have one in Crystal River if you want
to
get down to it.
You really want to get to the nitty gritty. It's closer than that, right?
Yeah.
So
yeah, it's a great location. So that's why people are coming in. I think that, we have so much to offer here in Ocala. The whole Tri-County area here. We have Marion, Sumter, Lake, so Citrus.
Yep.
So we have so much to offer in different aspects of, the amount of area that we service.
Yes. I mean, it's
so 1,800 listings just in Marion.
Just in Marion County. I mean,
amazing.
I think it was 1,809 to be exact, but I mean, I'm not
counting?
splitting hairs, okay? I'm a rounding guy. I know you probably don't like that as a numbers girl, but
no, that's okay. I round up. I round up, so don't worry.
So 1,850.
Okay.
No,
Yeah. Give it the benefit.
It's probably fudging it a little bit too much, but
So what's the average? Is there an average price right now that's
well,
out of those 1,800?
I can tell you what the paper says.
Okay.
But the paper shows 504, but I think that's a little bit lofty.
Yeah. Well.
Yeah, because of the farms and such that are with it too.
So what do you think? What do you think?
Most what I'm seeing right now, listings wise, are between 250 to 350.
Okay.
Now, obviously, you can get more than that, and you can find a few that are less than that, but 250 to 350 seems to be the sweet.
And that has always been the sweet spot, right?
Right here.
But we lost it there for a while.
Oh, gosh.
Right? We couldn't find anything for anybody, and it's still an affordability price point for folks that are, wanting that price point. They can get into it still. So
we're back to the inventory thing.
Thank goodness.
We have a few sitting there.
Yeah.
And we even got new construction at the 250 mark.
Yep. I've seen it even lower.
230-ish.
I know, it's crazy.
You know?
So for buyers, I mean, that's what
excellent.
is it's so nice to see it finally turn a little bit, especially for the blue collar workers and the hard people out there working hard for their money, to be able to go and have affordability again.
Yes.
And find a house that's nice. It doesn't have to have $100,000 worth of work on it.
Right off the bat.
Yeah, and take it or leave it type mentality that we had during the COVID.
I mean, when it was a seller's market and they're going, here it is. This is it. Do you want it or not?
I had so many agents back then that literally said, I'm not even going to present this offer because all we're taking is cash. All we're taking is conventional. And so all the first time home buyers out there, like yourselves, if you're looking for something, this is a different market now. So you have a lot of more opportunity than what you did back then. So I'm seeing concessions. I'm seeing reductions in prices. I'm seeing sellers really opening up their pocketbook and going, give me an offer.
Yeah,
so
absolutely.
You're in the driver's seat, so don't forget that right now.
And talking about opportunities, the Hometown Heroes just changed a little bit.
Changed a lot.
What changed?
So
help, because I really need to know this myself.
Okay.
So you're teaching me as much as them.
So the positives changed.
Yes.
That it opened up to all people that live in Florida. It doesn't matter. It's not profession oriented anymore. As long as your business, your company has brick and mortar here.
Okay.
So if you have brick and mortar, like you work for Amazon and they have an Amazon warehouse here, that qualifies. So you don't have to be a state licensed employee anymore.
Okay.
So it's open to everybody. The maximum allowable incentive or assistance is $35,000 versus $25,000.
Okay.
So what does that really mean? Because if you put 5% of your loan amount into equation, you're looking at about a $700,000 house to be able to execute and get really the full $35,000, right? Well, that's one of the other things they changed. So now they use all household income, where before, if it was just, if you were buying the house and your wife, you didn't want to add her income on the loan, we didn't have to do it. Now it's more like all down payment assistance programs. All income is included.
Okay.
But that's not a bad thing because now it gives you more. There's no maximum loan amount, So if you have a true first-time home buyer that can afford a $700,000 house, they can get the $35,000 assistance.
Right.
So that's the biggest. The biggest change was that it opened it up to all workers in Florida. The other thing is, that I know is close to your heart is, it's open to veterans, regardless of whether they're first-time home buyers or not.
Okay.
So that's available to them too. It is income driven. So if you have a certain amount of income and it exceeds that level, puts you kind of out of there. But if you do fit within those guidelines, which are not that that high, it's a great opportunity to take advantage of it, especially for veterans. I love if I can get the veterans into it. Sometimes they just make too much money, unfortunately.
Absolutely.
But they don't have to be a first-time home buyer where everybody else does.
Okay.
So that's the biggest changes. Is just that it opened up to everybody, not just.
I remember the list was long as your arm, anyways. Before
it was like anybody. I mean, I had to go like this,
right?
To try to figure out. Oh yeah, you do qualify. Good. Okay.
You don't have a search bar for that,
right? Now you're making fun of me because I'm
no. Look, I'm with you because I scroll for everything.
I was gonna say I didn't know you could do that. No,
where is that?
No, but that is the difference. Is that it's just and they just funded $100 million into the program.
Nice.
So what people tend to I'm going to use your mom for an example.
That's great. She's not watching anyway, so it's
okay, good. So she was a vet. They're a veteran.
Yes.
We talked about Hometown Heroes for them.
Yes.
What people don't realize about any down payment assistance program is it is a mortgage, a second lien against your property.
Correct.
It is not forgivable. It is repayable back. The good thing about it is it's interest free. You don't have to make any payments until until the 30th year if you stay in the house that long. But if you refinance it or sell it, it has to be paid back. When people hear that, i.e. your mom, she said, I don't want it now. Yeah. So there are times that people will say, that's a good program. I like it and everything, but I don't want to have that on the back of my loan here. So that's
hanging over my head, as it were.
Exactly.
Absolutely.
Because that's how Hometown Heroes continues to refund itself, is when people pay it off or sell the house or refinance, that money goes back into the funding.
But in theory, the way I look at it is in that 5 years to 30 years,
you should have enough.
You should have enough equity and appreciation on it that you're going to.
I tried to explain that to your mother.
I'm sorry.
So she's just like you, or
I
your
know
mom.
she is.
So
don't make me turn this camera.
So that's the only, but that's true with any down payment assistance.
Absolutely.
Program. There are some that are forgivable, but it's a whole different type of program.
Right.
But so it's, I love offering that because, it's just such an easy way for folks that don't have a lot of money saved up. that they can get into a home, and that's what it's all about, is home ownership.
Getting you in the house.
You know,
Absolutely.
quit paying somebody else's rent.
Right.
Right.
Oh, I
Or
say
a
that
mortgage,
1,000 times, I think.
Yeah. I mean, you have to say that daily, right?
At least once.
So,
At least
I
once.
mean, I know I do the same thing when they go, I don't want my mortgage over my rent payment. And I go, well, let's put it in perspective. I can get your payment where your rent is without taxes and insurance, but now you own it. But you know, there's a lot of things that people have to put into their mindset in today's environment because the rates are higher.
Yeah.
So, you know, I always tell you, and I always had that discussion with buyers, you know, this is just a temporary situation. I've been doing this for so long. This is the fourth cycle I've been in. This one's a little bit weird because it happened so quickly and escalated so fast.
Yes.
But I'm telling you, rates are going to come down. And when they come down, it's great for lenders because we have a refinance boom. So everybody wants, so you're never going to keep this rate
Right.
when rates go down. I don't care. You can get 7.65, or you can get and pay down points, or you can get 6.5. If the rates go down to 4 again, which I think they will, you're going to refi.
You heard it here first.
Yep. Yeah. Hold me to it. Hold me to it. So, well, it all depends on who gets into the.
We're not going there.
Okay. So, but yeah, that is the thing about first-time home buyers that I always stress. This is not your last home, and it's not your last mortgage.
Right.
So keep that in mind, because we want to make sure that as long as you love it, and I can tell you, you can afford it. You may not like that payment, but if you can afford it and you love that house, you can get it. It's gonna be okay after you refinance it.
Absolutely.
And then you'll probably be so used to making that payment, you'll pull all that equity cash out and want to use it for something
For
too.
something anyways.
Mhm.
Exactly.
Yeah.
Which did bring me, oh my brain went 14 different places as you were talking. So the VA streamline.
Uh-huh.
If you have a VA loan, could you VA streamline at any point in time? Or
after the you can do a refinanced interest rate reduction loan, which is the streamline.
Right.
No appraisal required.
Okay.
No income docs required. No credit pull is required. The only thing that we look at is, have you made your mortgage payment on time?
Okay.
Okay. But if you buy a house today, you cannot refinance with VA until the 9th month.
Ah, okay.
Okay, so after the 9th month, you can refinance as many times as you want to. There's no limit of times you can do it.
Right.
I can't tell you how many borrowers I've had that literally for a 0.5% difference in the rate, they keep refining. Now there are costs
Right.
that they dump on, onto the
Of course,
loan,
there's costs.
but it's not the appraisal. It's not the normal,
Right.
So we try to get, you don't have to get surveys and stuff like that, but there are typical transfer taxes and stuff like that you're still going to have. But if it's a 0.5%, and that's VA's requirement, it's not a cash out refi.
Right.
It's a rate reduction refi. So there's, which we do both. But if you want to do the interest rate reduction one with no appraisal, no credit requirements, and you can do that however many times you want to do it, you have to be able to reduce the rate by at least 0.25% to do it.
Okay.
So
Fair
it's
enough.
all for the benefit of the veteran.
Yes, absolutely. So I remembered what else, all the other ones.
Okay.
So that's why I had to write them down so I
Okay.
wouldn't forget them again. So my mom's an example again. And
Uh-huh.
like I said, I hope she's not watching.
Oh, I hope she is. Hi, Mom.
So buying points
Mhm.
versus going, you're asking, and I'm just throwing numbers out here.
Yeah.
You're asking $250 for this house. I'll give you $240, right? What is better for the consumer?
In my opinion?
Yes.
You mean as far as asking the seller to pay your closing costs versus paying?
Yeah. Pay 4% to buy a point for me, and I'll pay you full price,
Mhm.
or I want to come $10,000 off.
I think it's better to pay full price and get the seller concessions.
Right.
Because that's hard money out of your pocket that you're saving.
Right.
Right? The difference in the price, the payment's going to be minimal between, for whatever that 4% is or
Right.
whatever. So it's all about what's important to them. So if they want to save hard cash money, I'm always about go with the seller concessions.
Okay.
And in this market, I'm seeing more and more. I mean,
I have too, and it's
And I'm going to tell you, I'll tell you a quick story that I just had happen last month. We were in the process of, getting a loan done. The house had some repairs that had to be done. The seller did all the repairs. We had to wait for a final, a new 4 point and everything else to get the insurance down to be able to debt ratio this buyer. She was very,
Oh,
very
wow.
tight. So the existing insurance cost as is was way out of whack. Because it was taking the county time to get out there, the seller really wanted to close faster. He offered her in the middle of the contract, after everything was said and done and we were all done, just waiting on the inspections. He offered her $5,000 to buy down the rate so that she could get the higher expensive insurance, so that when she closed and all the inspections were done, she could go back and get the insurance down.
Right.
But he basically just gave her what she needed to get her
To make it
payment down.
happen.
Yeah,
Absolutely.
out of the blue. So that's how
That's nice.
crazy we're seeing things now, especially
Yes.
from the seller side. Their motivation is high right now.
They seem to be. It seems to be if you're selling, you're motivated to sell it all of a sudden.
It's like, I think, it's like I've said before, when the rates went up in March of this year, how they went up just right. It took me an hour conversation, and probably your daughter would say the same thing, with every client about the rates are up right now. They're going up. Unfortunately, we're not in where we were last year.
Yeah.
We had to have this long discussion, and people were just shell shocked. They were freaking out. They were just, some people fell out of approvals. There was a lot of that going on. And now it took until about May or June, the buyers started getting used to the rates. So even though we're sitting there still gulping every time we have to price out something, they're used to it.
Yeah.
So it mentally, they had their time to adjust and do it. The sellers didn't though. They were still trying to go off of what the prices were and the high escalations and everything else going on last year. And so that's why you started seeing these houses sitting longer, because they're like, well, my neighbor got 100,000, more than what or they got 50,000 over ask price, or they were totally different market.
Totally different market.
And I can tell you, Jeff, I told friends that I've done business with for years, agents, because they got a little bit snobby about, well, I'm not taking this FHA buyer. I'm not doing this, right? And I said, there's going to come a time when you're going to take those buyers back, and it's here.
Yes.
So, so it is now. I think the sellers are finally doing the same thing. They're starting to come. They're starting to come to realization that they missed that crazy, insane, never will happen again market. I don't think. Do you? Unless we have another pandemic.
It's going to be something crazy to get it there for sure.
Yeah, and that's, and I've said that 1,000 times. Who would have thought we would have been so crazy busy during a pandemic? I thought we were going to have to shut down. I was like, oh, we're out of business. And next thing I know, I couldn't keep up.
You can't keep up. Absolutely.
So that's why I think right now because I'm more partial to the buyer side, of course, right? That I'm happy to see that the buyers are in the game again.
Right.
So
I love the buyer side personally.
Yeah, me too.
I really do, because
there's so much reward.
Have that negotiation going on, and it's fun for me.
It's not boring, right? It's not just, this is our price, and take it or leave it.
Yeah. Absolutely. So it's always a blast for me, and I throw out offers still now, and I'm like, they're gonna come back and go, what are you doing, dude? We're in a negotiation time again. It is what it is. If this isn't what you're here for, you need to go do something else.
That's right. That's a really good point. That's a very good point.
Gone are the days of, it is what it is, you're out of luck.
Or, hey, I got 22 offers. And it went on the market this morning. So
come back with your highest and best, or you're going, here it is.
Yeah, right. It was like, this was just too easy.
So explain that. We keep saying buying points. Explain that.
Okay, so
please, if you don't mind.
Yeah, and what people think is, it's black and white. It's not.
Right.
So whatever the pricing is based on that borrower's circumstance, whether it's VA, FHA, conventional, credit scores, or down payments, or whatever that rate comes out to be, there are two different types of rates. One is a par rate, which means it's the rate with 0 points. So it's usually higher because there's no cost. Now, in this environment that we're in, rates are higher, and people think, well, the banks just want to make more money, so they're going to charge points. Well, the reality of it is that the market and how rates come out, the banks aren't making any money.
Right.
So a par rate is very hard to come by nowadays, which means most people, no matter what program, unless they want to, pay a little bit higher rate than what they want to pay by, it's very hard to get to that par rate. So the other option is buying down the rate. So you can buy down the rate, depending on how much you want to pay. So 1% of the loan amount is 1 point.
Okay.
Now, 1 point may not buy your rate down 1 point. It may buy it down 0.25%.
Okay.
Right? So it just depends on what the pricing is that day.
Okay.
I can tell you that on the norm in today's market, I would say that every customer that I see typically has half to 1% on their discount. Excuse me, their discount point. And then I have a customer I talked to right before I came over here, who has $50,000 extra money after the sale of his house, and he wants to put all that on points. And I said, you can't. It would take you to -1,000 or whatever.
Right.
That's you can't do it. But most of the time, the worst environment right now is you can get, like with FHA government loans. Those used to be the higher earning products for banks. Now they're the least. So VA, FHA, USDA, there's no money in them.
Right.
So that now you're seeing for the first time, an FHA buyer may have to pay a point.
Okay.
So and those are people that don't have money.
Right.
Well, if we flip them to if we flip them to Hometown Heroes, which we tried to do, there are no points and the rates are lower.
Right.
With Hometown Heroes.
Yeah.
So so that's an option that we try to go with a lot, especially with first time buyers. But the worst products out there right now are second homes and investment properties.
Oh, I'm sure.
So those there is absolutely no appetite in the secondary market, which is Fannie and Freddie, and they don't like them. They don't want them because they were so worried about inventory, right? That they said we're going to make them ugly, and unattractive, so that they quit buying all these houses up for investment or second homes, so that people have a place to live for a primary.
Right.
So they changed the rules this year with seconds, and they're treated just like investment homes.
Okay.
And if you can't put 30% down on an investment home today, I had a guy sent me a loan estimate yesterday from another company, and they were charging almost 4 points. 4 points. It was $20,000 in points.
Yeah.
For a second home.
Holy cow.
Yeah, because he was only putting 10% down.
Yeah.
But if he put down 30, he wouldn't have those points. He wouldn't have the points. So those are the ones that are tough right now for people, is getting into the second and the investments without putting down a good chunk of money.
Yeah, the investment homes are hard to come by right now, believe it or not. It's kind of funny here. It's daggone.
I know. And, I know a lot of investors, want to, buy and pick up because the rent inventory is low too, right? The rentals. So, but, they can buy anything right now and make it a rental, but they're just not getting a good deal on them. So they have to, and I'll tell you that because it doesn't really apply to first time home buyers, but if you want to, build wealth and buy investment properties down the road after you got established, the good thing is that we can offset, if it's an investment home, we can offset your proposed rental income on that house off your payment.
Okay.
So you don't necessarily have to have additional income. We just do a rent analysis on the appraisal, and if it comes in if your payment's $2,000 and the rent is $1,800, then we have a $200 negative payment, and that's it.
Okay.
And that's against you. So it's a good opportunity there too.
Nice.
So lots of products out there, and for first time home buyers, there's just a plethora of opportunities. So, I always tell people the first step is always the hardest, because you don't think you will qualify, or you don't want to find out you don't qualify or whatever. But that's our job, is to let you know what you qualify for. If you don't qualify today, when you will qualify, what you need to do. And, our whole goal and desire in this business is to get you into a home.
Absolutely.
So, it's a long-term relationship. It's not something we start and get over with.
Right. And that's the funny part, is I try to tell people that I've had a few folks come in here and sit down there like, look, I know I'm not going to qualify. What can we do?
Yep.
And it's like, okay, let's walk the steps because we're here.
Listen, I always tell people it's not a life sentence.
Right.
It's going to take some work if it's credit issues or something like that. But if you're willing to do it, I'm willing to work with you. And we're willing to get you. I mean, what is the end result? The end result is you become a homeowner. And if that's your goal and that's what you want, then I consider it my job and my honor to help you get to that point,
right. Absolutely.
Yeah.
Absolutely. We don't have a single question.
Well, you know what? Can I just say it's probably because it's such a beautiful day out there today. People aren't probably on the screen like us, right? Could that be
We're sitting here in air conditioning, soaking this
I
up.
know.
I'm not complaining. I did bump it down when we came in, so
I know. I like it cold too. Well, let me ask you a question.
Lay it on me, girl.
All right. So, what do you look for in lenders, like when you're trying to assist your buyers and what you're telling them?
Oh man, I like somebody that has options and that I know can perform.
Yeah.
Those are my two big ones.
Yep.
Personally, and I like to have a relationship with them. Debbie, I love you to death. I really do. I met Debbie 2 years ago.
The feeling's mutual.
And we hit it off like gangbusters. And I mean, I referred my mom to Debbie. So, yeah.
Okay. I wasn't going to say anything, but today's my birthday.
What?
That's how much I care about
you.
The
Facebook did not tell me that this morning. So I won't know what's up with that.
I don't know, but that tells you how much I care about you.
Oh, happy birthday.
My husband was
so
like,
sorry.
You're going into work on your birthday?
Happy 25th birthday.
Thank you. I know. I told my daughter this morning, I said, honey, I just keep looking at myself thinking, I look so good for 40. And she goes,
wow, I did not know it was your birthday.
Ish.
Yeah, well, happy birthday. Well, thank you for
so
coming in. I really appreciate it.
Don't forget that now.
I will not. Look, this date will be in my calendar from now on.
No, but I mean, that goes to show you how much I care about you.
Right, absolutely.
So I would do anything for you.
So your birthday's real close to Lottie's birthday. I don't know if you knew that or not.
When is hers?
The 28th.
Yes, because we definitely do birthday lunches.
See, I remember these things. I try anyway. So now I got to lock yours in there too. So
That's okay. But I brought that up only because.
Well, I'm glad you did.
Yeah, because and that's kind of what, when you, and I know you haven't been doing this a long time, but you got into it and just took off like wildfire. And it's your personality. It's your desire to help people. I mean, everybody loves you. Everybody knows you. You've made a big presence in your very short time here.
Right.
And, when I'm working with agents, the one thing that I think has pushed me through the years of doing this, I mean, you can't do it for 30 years and not be doing something right.
Absolutely.
And I don't say that as a boast.
No.
It's just a reality, and the experience level. And, when you go through, you start seeing things happening right now, and I'm seeing them because I've seen them before during a different market like we have now with higher interest rates and stuff. But you'll see, loan officers that get into this business and, they have to learn, right? And those who stick with it, it's a great business to be in, but it's not an easy one.
Right.
Right. So, but, I think that my relationships with my agents and what has kept me, I've been very blessed, to have good relationships, is the fact that they can count on me to be honest. They can count on me to tell them up front it's going to happen or it's not. I'll tell you, I think the one guy that we did that was he was buying an investment, new construction. I'll never forget him because he was just an odd fellow, right?
Yes,
he was.
Very much so.
And his wife too.
Yes.
And all the way through the whole process, I never knew if it was really going to make it to the table because I kept waiting for him to go, no,
I changed my mind.
Yeah. And, but it was a weird situation, but I even told you, I remember saying this one, I mean, he qualified. There was no problem, but this one, I'll believe it when it happens. That's all I can say, right?
That was kind of like grabbing an eel in the water.
You're exactly right. And I'm just like, and that's what I tell, that's what I tell people. I'll go, you know what? I'll get this done. But I'm just telling you right now, it's going to be ugly. It's going to be hard. It's going to be tough. When they start calling you going, she's driving me crazy, you go, yep, but she's going to get it done.
It's going to get done.
It's going to get done.
Do what she needs. It's going to get done.
But that's reality. I mean, and I pride myself in telling people because I see it all the time on Facebook. I just saw one with Charlotte, that was a clear to close that wasn't.
Yes.
And, I don't know how that happens. and I'm in the business. I mean, mistakes happen, things happen, customers do something. People don't realize when you're in the loan process, and I'll just say this for the folks that may or may not be listening, you don't go out and open up new credit. You don't go out and buy new cars. You don't change jobs during the process, please. And I'll tell you that 10 times before while we're talking. But people do. And they, so some things are outside of our control. But most things, I mean, the way that we are nowadays with technology and everything and how we can run an approval and we get documents. And if you have someone that knows what they're looking at and they understand what they're looking at, you can pretty much, and I probably said it to you, you can take it to the bank. It's going, we're closing. It's not going to be a problem. We're good. But the ones that make mistakes and then they blow up someone's life at closing or 2 days before closing. I can't tell you how many loans I get on the second or third week of the process, and the loan officer just didn't know they couldn't do something, so it blew up in their face. And, I think of home buying as the most important purchase you ever make. So it's either going to be the most excellent experience or it's going to be torture.
Yes.
Right. So I don't accept anything but an excellent outcome.
Absolutely.
So I don't know how that happens. So when it does, it makes us all look bad. And it really does. And, and that's, but I have never been able to understand how someone can tip a customer on their head and go, oh, sorry, but you're not closing. Now.
Right.
Or I don't get it. I just don't understand it.
I'm going to share one, and maybe you can shed some light on this for me, because I'm still wondering why. Okay. I've got a young lady. Well, she's 80.
Okay.
God
sorry. Bless you.
She's 78. Okay. But she's closing on a home. They're getting a loan. They're moving here. Right. The lender actually asked her she was married twice before, so she's on her third marriage.
God bless.
He asked her for her previous 2 divorce decrees to make sure she doesn't owe alimony or child support. And she called me, tore up from the floor up, Debbie. And I do mean that in every shape, form, or fashion. She's like, you got to do something. I can't do that. And I go, let me call them. Don't panic. So why would they come and ask her for that at this point?
Did they really ask her?
Yes, they did. They asked her for the divorce decrees for her previous 2 marriages to show that she was not paying alimony and or child support. And see, that's what I said. I'm like, I got nothing.
Okay, well, first of all, let me tell you what they could have done. If they had a question.
Right.
Look at your bank statements. See if there's outgoing checks for, a certain amount.
For child support, right?
Yeah, that's one.
Right.
Yeah, you can pretty much see that. But I have no idea.
Look, you're flabbergasted, just like I was. I was like,
did they waive it?
She got one. She was able to go to the courthouse because it was semi-local. Pay $28 for the records and send it in. But the other one, she goes, Jeff, I don't know how I'm going to get this one. So I called her lender. I said, look, we have to be able to do something. There has to be another option here. He goes, well, I'm trying to get the underwriter to okay.
How did they find out she was married twice? Because of her name changes?
I would assume so. I don't know.
But
I didn't get that.
I've never. Okay, first of all, on the 1003.
Yeah.
You asked if there's any alimony, child support, or whatever, right? So that is a declaration that's signed and marked. So if a customer says no to those items, I don't care how old they are, but if they say no, the only way that we would ever find out anything, or if the customer was lying, is get a pay stub from Jeff, and there's a garnishment for child support on his pay stub.
Okay.
But so I don't know what triggered, and I would never ask a 78-year-old woman for divorce decrees unless there was something that flagged them somewhere.
Yeah. Well, he actually came back when I was talking to him and said, I'm trying to get the underwriter a letter from them just stating that she doesn't have a signed letter, handwritten signed letter that says she's not paying any alimony or child support.
That sounds like a
but again, if they signed
okay, can I just tell you, I don't know who it was. I don't want to know.
I'm not going to tell you.
Okay.
Yeah.
But I will ask you offline. No, I'm kidding. Yeah. So that is an example of a loan officer not questioning the underwriter. Because let me tell you, as as we all respect underwriting and what they have to do because they're the gatekeepers of the company,
Absolutely.
right? They are sometimes wrong.
Absolutely. We're all wrong.
Or they may be interpreting that guideline a little different. I have 30 years of doing this. I
Right.
used to run an operations side, so I am notorious, and they love me. I'm not nasty about it.
You're right.
I'll just go, Jacqueline, why are you asking for this? I found out, and I'll tell you an example. But anyway, so that is someone that's not saying,
Okay.
thank you, underwriter, you're a god for giving me this approval, and I'll do whatever you ask for because
Okay.
it makes sense because you said it. But if it
Right.
doesn't make sense, you have to go back to the underwriter and go, why are you asking a 78-year-old woman to give you something that you know doesn't matter?
Right.
Yeah.
But she already told you once she doesn't have.
And why are you asking for it?
Right.
I mean, I don't care if you were married 8 times. Usually, if you were married 3 times, you were getting alimony.
Right.
There was a reason why you were leaving him, right? It wasn't because you weren't getting something.
Right.
Usually,
Absolutely.
I'm sorry to say that, but it's usually, and it's not always the wife who gets it, but if you are getting divorced and there's an alimony to be given, it's usually the other way around.
I was just curious if there was something that I wasn't aware of because I was dumbfounded.
But I will tell you that just like originators, underwriters get into this business, there's some new ones too, right?
Yeah.
So they're learning it, and so that's why they have team leads. That's why they have senior. You'll hear me go, I don't even if I don't make it with the underwriter, I go to the underwriting manager because, again, I'm not boasting. It's just just like you with air conditioning, it inside and out. I don't know anything about air conditioning. All I know is it better work, right?
Exactly.
So that's all I care about. And if I feel like, in fact, I was in my house last night. I went, it feels a little warm in here. So I'll notice things like that, but I don't know about that business,
Right.
And that's my business. So if I've been doing it this long, then, and I don't know some things, and I haven't seen a lot of things, and understand. Rose, my assistant, she goes, man, you live a charmed life because I never lose.
Right.
It's not that. It's just that you know what you know, right?
Make it make sense.
Now, if it's for real, if there's a reason, then it is what it is.
Absolutely.
But I had a situation just the other day, and I'll tell you that it goes back to first-time homebuyers and hometown heroes, which I would bet 99% of originators don't know that because I didn't know it. And because Hometown Heroes is, a pretty new program.
Right.
And when you think of Hometown Heroes, who do you think is the buyer for a Hometown Hero program?
The buyer from Hometown Heroes.
But first-time buyer.
Yeah.
Right? First-time home buyer. I just got a client. I went to Florida Housing because this person said to me, this buyer said, I was told that I don't have to be a first-time home buyer for Hometown Heroes. And I said, well, who told you that? She goes, Florida Housing. And she was a teacher buying a house in Denellen. And I was like, no, you could have owned a house, but it had to be 3 years ago.
Right.
Nope. Mm-mm. I owned a house 3 years ago, but I only sold it 2 years ago. So basically it's been within the 3 years.
Yeah.
And I said, she goes, but I didn't live in it those last 2 years. And I said, okay. So I don't ever say no but in my mind, I'm thinking, you're wrong.
Right.
I know what we could do. I called up Florida Housing and talked to the head of Florida Hometown Heroes. And he said, the minute she vacates that house, we consider it an investment and not a primary, and she qualifies.
Nice.
So that, that is the beauty of this business. I mean, every time I think I know everything, I don't. But every time I think I do, I learn something new, and that's what keeps me so in it.
I made the same statement this morning. The second you think you know everything is when somebody's going to show you don't. Mm-hmm. Okay, so I'm always ready to learn.
Right. And
I really am.
And every single underwriter, the really great thing with prime lending is my underwriters, I can call them at 10 o'clock at night. I can IM them on the computer and say, hey, can you talk? I got a situation. We have this one team, one purpose mentality. And it's like, how do we have to get this client to the table? Right?
Absolutely.
So, but a lot of them, some of them are stricter. Mm-hmm. Some of them interpret the guidelines a little differently than we all have our favorite underwriters because we know them and they know us and they love our files because we know what we're doing and blah, blah, blah. And then we get that off-site one that I haven't got before. And I'm going, oh my gosh, she doesn't know anything about the villages. It's not a PUD. It's this, and it's not a homeowners association fee. It's an amenity fee.
Yeah.
But no, I need the. No, you don't. The appraiser isn't going to change it because it's not a PUD. And so that's the same thing that people go through when they use out-of-state lenders, right? Because they don't know our area. Well, I deal with that with out-of-state underwriters that don't know the villages, and I go, I'll go to my processing manager and I'll just say, Lindsay, please, would you just let her know I'm right? I don't want to have to keep going back and forth with her. And so I got this.
Whatever Debbie says.
Yeah. So the good news, so that's the truth. We have new originators, we have new underwriters, we have, new agents. So like with one of the things with Maureen here in the office, we just closed a good, nice deal together. And the customer was buying a new construction, and she did a really great job because it was a new construction for her first time and all that. And, I love working with new agents because they just are so eager to, they don't know everything. They're not, they're not telling, and they're not doing it wrong. They're just learning it. So I love working. There are some agents out there that, they've been doing it a long time, but they just aren't any good.
It don't mean it's right.
No, and it doesn't. Yeah. So I've seen it all. Trust me. But I love working with new agents.
Yeah. And this, the lender in question, they chose them. They brought that lender with them when they came to me, and I was like, oh Lord, here we go.
Okay.
So I was worried about it from the jump.
Well, it's funny you say that because I always wonder because I've seen it both sides where because I do a lot in the 55 plus communities too. And, I see listing agents that are people, they're listing and buying agents together. They do both sides. And, they literally will tell them, you have to call her. You don't have to use her, but if her pre-approval's there, then, and usually when they talk to me, they stick. Even if they have their favorite out-of-state lender or whatever.
Yeah.
But and I don't know if that's legal.
I don't either.
And I don't know if it's appropriate. But I think on my side of it, when I'm looking at it, and I go, if somebody asked me to refer them an insurance company, I know which ones I would refer, right? If they asked me which real estate agents I would refer, I have no problem doing that. I'm not saying, but if somebody, if somebody is bringing in, and I'm just going to use because I think everybody knows, Rocket Mortgage is, okay. So, or I'll tell you, USAA. My dad was in the Navy for 30 years. I'm part of USAA, right? Navy Federal Credit Union, Quicken Loans. What buyers don't understand is that when they start the process with them, they don't end the process with that person, right? So it's a call center. And if that's what you want to know, because I can tell you on a personal level, when I bought my house, I went through prime lending. Okay. Easy peasy. Right. When I refinanced it, when the rates went really low, I went through, PennyMac. Now, PennyMac is also a huge conglomerate, and I realized, being the consumer side, what that meant. It was hard. I had to log in. I had to check my progress on my own. I couldn't call my loan officer. I had to go through the processor who would go to the loan officer at some point, get me an answer. And I'm old school. I love the fact that I can take you face to face. I can talk to you over the phone, and you have the right to walk in my office and call me out on anything. Do that. Right. And stupid things like people looking you up on Google, right? They call you and answer the phone. And they go, you answer the phone? You're the first person that's answered the phone. Yeah. It's old school stuff, but it's what we say, you get what you pay for. Sometimes we're not always the cheapest. We're not always the lowest rate because everybody's going to undercut everybody. That's just the business we're in. And if somebody sees this and everybody thinks that, just like your services, you're never going to be the cheapest because you're good at what you do, right? You get what you pay for. So that's what I tell people, when even going to USAA or going to Veterans United, or it's such a large corporation that they have a process, and what's important to them is the process, not the client.
Yep.
So that's the difference between using somebody local and going outside and
they just want that bottom dollar and get it to closed. They're not worried
they
about that
don't
relationship.
They don't care about Ocala,
right?
Right? I mean, they could care less.
See, I'm like you. I'm old school. I want that relationship.
I want you to be able to say to me, 2 years from now when rates come down, oh, I'm just going to stop in and see you and say, and I don't know if you see this, but my car is out there every day of the week. I come in every single day. Not everybody in my office does, but I do, because I love it. Yeah, come on by, swing by. Come on, I'm here.
I'll check on you, make sure you're good over there.
Yeah. Thanks for doing that, because I don't know if anybody ever knows if I was there.
It's like when we pulled in, I said, "Oh, David's at Dallas."
So, but yeah, to me, that is, in this day and age, we are so social media, so technology.
Yeah.
But at the same time, I can't tell you, I love sitting in front of clients and getting to know them, and them getting to know me, and them walking out and giving me a hug and going, this is going to be an easy process.
Yes.
Their stress level went down. They're not worried. That's the beauty of our business.
Absolutely. 110%.
So do we have any questions yet?
There is not a single one.
Are you sure you're on live?
It says I've been on there for 46 minutes and 15 seconds. So,
well, then if we're, if you think we're good,
I'm good if you're good. So you guys, thank you very much. I'm going to give you another couple of minutes. We may chat for a minute or two here, but if you have any questions, feel free to post them up. Thank you for watching, and we'll catch y'all next time around. Debbie, you want to tell them how to get hold of you?
Yeah,
give them your number.
Yeah.
Yes.
Debbie Cowan, and it's 352-433-7846. And my email is debbie.cowan, COWAN, @primelending.com.
Awesome. And thank you again.
Thank
it was
you,
a pleasure.
Jeff.
Happy birthday again.
Thank you.
You guys, thank you very much. And we'll catch y'all next time.
Happy home buying.
Thank you, guys.